Monday, April 17th. Market analysis, Stan Ehrlich. 10:05 California time, a little bit past the middle of the day, and what a very slow, boring day so far. Half the day is gone, and we've got a 2-point range. 413.20-ish, 25 to 411.20. Almost exactly 2 points. Trending downward extremely slowly. The more important picture is that we got overbought again on Friday. So we're only down 75 cents, but at least a little bit lower. I expect a little bit more weakness. In fact, for a couple of weeks now, I've been talking about gaps below the market, and we had two bearish engulfing ER sell signals that didn't work very well. First one offered a very mild, small 1.5 day profit. The second one just plain didn't work. We just lost a little money. So one slightly profitable, one slight loser. I'm waiting for a better sell signal. I wouldn't be surprised if I get another one. The overbought condition did stop so far, this rally, and it was up against a resistance area as well. The previous highs that we had in that trading range back in late January, early February. So no surprise. I'm looking for that gap at around 397 or so to get closed. That wouldn't be a really big break. We're only at 11, about 14 points lower is all it needs. Wouldn't change anything, probably not change anything on a longer term basis. And it might even get a little oversold on the way down for a good buy signal when it closes the gap, if that happens. So far, we've had higher highs when I didn't expect them and some higher closes, but no particular blast off, big bullish breakout or anything like that. So the potential of a gap closure or a little bit more slippage still exists. Let's take a look at the DIA. The daily data chart on the Dow Jones Industrial Average ETF, is right here. And it also, again, has gotten overbought in just the last couple of weeks. And we have two bearish engulfings that didn't work. We are definitely in a significant area of resistance that goes all the way back to November for the DIA. So it wouldn't be surprising, wouldn't surprise me if we did dip back to 329-ish to close that gap, or maybe all the way down to 322 area, although that's a little bit of a stretch. And lastly, the QQQ has lately had a little bit of a turn here, meaning it led the way up in the beginning of the bull market since October until a month or two ago, and now it's acting a lot weaker, quicker, easier. Does not have two sell signals. It has one, didn't work a few days ago, and did not make a new high for this little move up. Now that already had happened a couple of weeks ago when it got overbought, and it since hasn't made any higher highs. Is it building a little bit of a top? Well, it's also got a gap to close, right in the ballpark of 308.5, which is not too far away at all. So I think there's that opportunity. None of these downside gap closure price levels in the three indexes I've talked about should produce any major sell signals. And they might get a little less overbought or closer to oversold if it can get down to some of the lower ones without any particular bearish activity. Let's look at futures. By the way, I'm still basically bullish. One downside correction or not, based on the stock market indexes in general. Now, this is the E-mini. It's a futures contract as well as an index, of course. It has the same little tiny inside trading range near its lows for the moment. Nothing particularly interesting, except just like the SPY, it came up against some resistance It turned into an overbought condition just Friday at that resistance area, and it's turning down a little bit at the moment, but it's very slow to move around today. Boring day. Next chart, but not for everything. Wheat, a little bit of a rally. Got a buy signal a couple of weeks ago. Starting to look a little bit better for a longer term, better rally up to 735, which it did almost already, but I expect to see it again, maybe breaking through that red barrier. Next, bonds, particularly important these days, interest rate futures. 30-year long bond is sharply lower for the second day in a row and has been down. Wow, didn't realize that until just now. Guess what? Since the day it hit the resistance area and got overbought, the bonds have been down 1, 2, 3, 4, 5, 6, 7 days in a row. And all of a sudden now they're not very far away from oversold. And they're not very far away from the lows we had before of 29 point and 5/30 seconds. 129 and a small number. Looks like it has the opportunity to create support again and maybe turn yellow, meaning overbought. Oversold. That would cause me to believe the support would hold and we'd be on our way up another time to see if we can get up to 134 plus for a major breakout to the upside, of course. I'm not very bearish on interest rate futures. We're close to oversold. We're close to support, and 7 days in a row. Next chart, 10-year notes. Let's see, we had one down day, 2, 3, 4, 5 days later, we had one up day, and then the rest of them have been down. So 6 out of 7. And resistance, yes. Getting closer to oversold, yes, but not as close as bonds. Close to the support levels, yes. So this is going to end up being just about the same thing probably as bonds, of course. Next chart, and that's holding a support or maybe dipping a little below it, but still an up move. I'm expecting in interest rate futures very soon. Crude light. Resistance, overbought, again, just a couple of days ago. Today, a new low for 3 previous days, starting to get down to close the gap I've talked about for well over a week at 75.75, give or take a little bit. Yeah. To be specific, 75.72. That closes the gap. And I'm looking for that to happen. Next, heating oil, neutral. Can't say too much about it. We got some really great sell signals at that rally high back there, close to the top of the whole damn move. And the top of that whole damn move way back on June 17th of 22, 10 months ago. Top is a top. So that's 2 out of 3 tops, and the one that wasn't was real damn close. Next chart. Natural gas is now a little bit stronger than I would have expected. It's above that resistance level. So I can I can expect a little bit more strength, but not too much more. Almost 60 on the RSI is not that close to being overbought. So maybe a little bit more strength, but the long-term trend should be down. I'm looking for a sell signal. Next, gold, platinum, and silver. The ER buy signals that I got were all at the bottom of the break and the beginning of the move that we've seen so far. So on February 28th, we got a green bullish engulfing. It's the first low of a little double bottom and the lowest low, and up we went. Not going into too much detail about, reactions and so on. Next, a lot more money and better, stronger, quicker rally off the March 10th bullish engulfing ER buy signal, went straight up. I mean, wow. Until we had a sell signal, didn't work. Another sell signal that didn't work. And now, yesterday, Friday that is, we have a brand new sell signal. I've mentioned before, they tend to cluster. I've seen 3 and rarely 4 in about a month period or less. And this looks like that combination. I said the same thing on Friday. Today's high is high enough to get up to our little red dot, which is our ER3 entry point. ER1 is short from Friday, and both are doing outstanding. In fact, the ER3 sold almost the high of the day today, almost. And great entry, great trade so far, great signal so far. Silver. Next. Oh, I also have been talking about the fact that if we're long from an old buy signal and did not get stopped out of that old long yet, maybe today did stop us out, then we stay long until stopped out. So even though I've got the 3 sell signals and today's is acting from a bearish point of view perfectly, we may not be out of an old long and very, very profitable old long position. Next chart, platinum. Got the bottom. It's a double bottom, a little small one over about a week, week and a half. And we got the lowest low, which is the second low instead of the first. And up we went, but not particularly that strong as silver, that's for sure. And got overbought the last couple of days. So I'm looking for a little bit of a dip. Next group, high-grade copper, still a metal, but not precious metal. So overbought on Friday, dipping down a little bit, kind of neutral in high-grade copper. Soybeans, we had a buy signal that worked for a day period. ER1 did very, very well in the first day, green, and ER3 never got long, as a matter of fact, because it took too long to come back down to the retracement level. So ER3 never got long. ER1 just simply made some money, period. The buy signal's turning out to be okay. This looks like a pretty good, strong close today, and maybe in the next day or two, we're going to see another new high. For a month, next, bean oil. Buy signal didn't work. Fairly neutral at the moment, although the long-term trend is down. I'll try to catch a bearish signal here very soon. Next, soybean meal. The opposite, bullish trend, long-term. Buy signal didn't work lately. Almost a new high and a new high close. Not quite. I'm neutral to friendly for soybean meal. Hey, a new high and a new high close here for about a month and a half now in corn. Corn's bottom was an oversold condition. We never got a bullish green buy signal at the bottom, unfortunately. And the last signal was a sell signal, and that only worked for a day, but it did work. Even with an ER3, it worked. Just before Good Friday. Trend is long-term fairly neutral, flat. And here we are overbought again at a resistance line. I probably should raise this line just a squeak. Right about like that's good enough. And we're touching it as it touched it back there. I just raised it off that a little bit. Next, well, it's topping out, I think. Topping out. Next, live cattle, overbought, retraced backward a little bit. Last few days, got the buy signal almost at the low of the last break and a sell signal almost at the high of the previous rally. We got that bottom and we got that top. So friendly, bullish. Maybe there's a little bit more of a dip first and then up. Live hogs, buy signal did not work. We have oversold conditions in the last couple days. Maybe there's a little bit more of a rally short term, but the trend is obviously down. Would be looking to sell short something in the neighborhood of 90, 92. Not very far away. Next, OJ warned about being overbought. New low for a week plus. Looks like a new low close for a week and a half. Also on its way down for correction and a bull trend. Probably doesn't have too much further to go. 257 looks interesting. Maybe even down to 245, 246. Next chart, cocoa. Generally the same kind of commentary. Bull trend, looking for a correction. Not very much of a dip expected. 2007.93 looks very interesting for a buy. Cocoa is out, sugar is in, overbought. Don't chase this market up. Probably will have a very sharp break very, very soon. Looking for more sideways to a little bit of a downside correction here, a fairly decent downside correction, maybe down to 21-ish. And then we'll see. Next, back to the E-mini, S&P 500. No rally yet of any consequence. We're still a $0.50 lower on a spider. Let me go back to sleep and take a cat nap. Talk to you tomorrow. Boring.